And that means that for every dollar that you have in the bank, there is actually 0.00061 dollars. So that's, in other words, there's 6 cents for every $100 of deposits that you have at the bank. They can actually pay out 6 cents worth of cash on $100. Hi, this is Mike Maloney, and this is a follow-up to a video I made a couple of weeks ago. What I ended up with was showing how much currency is available if everybody was to go to the bank today and withdraw all of their funds. The thing is that banking is very, very convoluted, and so I wanted to dig a little bit deeper into that for everybody and show you just how convoluted this gets. This is base money, and I've talked about, or base currency is the proper term. They call it the monetary base, but it's base currency. It's not money. But this goes all the way back to 1918. So this is when the Federal Reserve started publishing or started collecting all their data. And I can zoom in on this, and I've left the long view of it because I like to see the recession bars and how regular the recessions are and point out that we're due for a recession. But this base money is the currency that's in circulation out in the public plus the reserves that banks carry. They either carry those reserves as vault cash or they carry it as deposits at the Federal Reserve. So the commercial banks all have accounts at the Federal Reserve. And so I want to take a look at the reserves. So of base currency, when you deduct, this is 3.9 trillion, and you deduct the currency that's in circulation, basically 2.6 trillion is held as reserves. The total reserves at depository institutions is 2.52 basically trillion. That's at banks. There's some reserves held elsewhere. I don't know where, but the difference between this figure and this figure is that this figure is a measurement of just what's in the banks or in the bank's accounts at the Federal Reserve. Now, one thing that's really interesting, if you look at the total reserves of depository institutions, and I just threw this in here because I stumbled across this, these are reserves that are non-borrowed. So they're not owed back. They weren't whipped up and owed back. And the only difference here is you see that it goes negative during that crisis of '08. So all of this was borrowed. The banks have to have a certain percentage of these reserves are reserves that are against loans. They use those in fractional reserve banking. They have to have a certain amount of dollars in the vaults or on deposit with the Fed in order to create loans off of those dollars that they have in reserve. So the banks were basically bankrupt during the crisis of '08, and this shows it, that they didn't have the reserves, the deposits, to be able to pay this out, and they had to borrow that from the Fed. All of this stuff where the banks went negative. The banks were upside down during the crisis of '08. But to get back to this, these are the required reserve balances, and of that 2.52 trillion, only 90 billion is currently 92.7 billion is currently required for the banks to have that backing up the loans that they have created on top of this. So these are the required reserves that they have to have. And then, so if you deduct the required reserves from the reserves, you end up with excess reserves of depository institutions. So these are the excess reserves that the banks have that they can actually pay out. And this is 2.37 trillion. And I took this and divided it by, instead of using M2 like I did last time, M2 is the current broadest measure of the currency supply. But they used to publish, before March of 2006, they published M3, and that was the broadest measure of the currency supply. And there's a couple of people that calculate M3, and one of them is John Williams of Shadow Government Statistics, and I subscribe to his services. And right now he says that M3 stands at 17,240 billion. So M2, when I did these calculations in the video a couple of weeks ago, I was using M2. M2 is at 12 point something trillion. I don't remember exactly what it was 2 weeks ago, but it was at 12 something trillion. So this is taking the entire currency supply, the broadest measure. If everybody went to all of the banks and brokerage houses and asked for their currency, and they wanted it in $100 bills, how much could you get? Well, if you take the excess reserves, and if you take that and divide it by M3, there's actually about 13 cents, it's closer to 13.7 cents for every dollar that we have deposited that we could get back. But you couldn't get this back like tomorrow. You couldn't go in there tomorrow or today and ask for your currency and get that back, because most of this is just digits that are floating around in the computers of the Federal Reserve. Most of this excess reserves is held in the commercial banks' accounts at the Federal Reserve. So what I showed last time was vault cash, and when I showed it a couple of weeks ago, it was 73 billion. Now it's $69.8 billion, and that's because of this seasonality thing. It peaks in January and then starts to fall, and these numbers are as of March. We don't have the April numbers yet because this is a monthly chart, and April data isn't in. The last time that I compiled this, it was as of January in the last video. So we're at 69.8, except some of the dollars that are in the vaults are also pledged against loans. They were used to create fictitious dollars that didn't exist. When somebody signs their name to a mortgage or an auto loan or a credit card, or any time that a bank is going to create currency through fractional reserve lending, some of the time they have to have dollars in the bank to back up this loan that they are creating. I say some of the time. The reserve ratios, I believe, are 10% for the first 3 million that a bank loans, and then it drops to 3% for the next 73 million or something like that. And then after that, there's no reserve. They just get to create unlimited dollars. And you can find out the actual figures. It's on the Fed's website here. You just have to poke around a bit. But because some of this is pledged against loans, it means that, and that is vault cash used to satisfy required reserves. So of the 69.8 billion, 59.3 is pledged against loans that have been made. So it's used to satisfy these required reserves. So if they wanted to pay out any of these dollars, what that means is that the bank that's paying it out would have to sell off the loans that are related to this vault cash used to satisfy required reserves to another bank, or they would have to call in the loan, which contracts the currency supply. It's deflationary. That is what was happening during the Great Depression. Banks were paying out cash, and they had to do so. They had to contract their loans, their loan book. So what's left over is vault cash surplus. These are the dollars in the vaults of the banks that they can pay out today against people coming in, closing their accounts, or asking for some of their actual cash in $100 bills and such. And so there's actually only $10,500,000,000 that the banks can pay out against 17.24 trillion of M3, and that means that if you don't want to wait for the Federal Reserve, I mean, you can wait for these excess reserves right here They've got these reserves in deposits at the Federal Reserve banks. And the banks can withdraw this and pay that out in $100 bills. But how long is it going to take the Bureau of Engraving to print $2.367 trillion worth of $100 bills? I don't know if that measures in months or years of running the printing press, but what they actually have to pay out today or tomorrow is just the 10.515 billion. And that means that for every dollar that you have in the bank, there is actually 0.00061 dollars. So that's, in other words, there's 6 cents for every $100 of deposits that you have at the bank. They can actually pay out 6 cents worth of cash on $100. And so, as my friend Dennis Miller says, the Federal Reserve Bank, the only reserve they've got is they reserve the right to print, because that's what they're going to have to do if you actually want some of your cash. But what they would do before that is they would probably try to make cash illegal. So that's it for this video. If you felt that you got something out of this, the education and so on, please like this video and share it with anybody that you can. Thank you very much. We'll see you next time.